Hey everyone, welcome back for those regular viewers. Thank you. We're getting some pretty decent sub numbers now, which is awesome. If it's your first time viewing, then you might want to check out the educational playlist just so that you have a bit of an idea about what I'm talking about. Today we've sort of been consolidating. We've definitely created the structure to break out of this area. And I've been sort of chatting in the Discord this morning with a couple of the guys about, why have we not gone to 120 on Sol, and why have we not gone to 170 on Sol, basically, or 173, 172? And all I can sort of put it down to is a combination of liquidity. E.g., we're not really going to push up if people are too bullish because they want the shorts to be there to push the price up. And the other side of it may just be efficiency. The key to price structure is only ever created when a candle closes. So from the moment it's open to the moment it's closed, it's all just noise. It's just inducement. It gets people to open positions because it's going up and down and up and down and up and down. And so therefore people are going, oh, long or short or long or short or long or short, But then once it closes, it will be closing over some kind of level, whether it's a trend, which is a level, whether it's a horizontal level, a range level, a fib level, there'll be something. And that's the point at which often you know what comes next. So at the moment, we're sort of just bouncing around in the middle between some high time frame targets we haven't hit to the upside and the downside. If we look at the one-day liquidity today, we've got this liquidity sort of down to about 135 and this liquidity that's up here to around 151. Now, because this is daily liquidity, it means that these positions have opened in the last 24 hours, which means in the last 24 hours, people have started to flip a little bit more bearish on BTC and on Sol. And there's less here to the downside, which means people are drawing back from being bullish. So that's okay. We're starting to see a little bit of a sentiment shift, which might mean that we do then get a bit of a push to the upside. If we look at the 7-day liquidity, you can see it's the other way around. So, anything over 1 day is going to fall into this sort of category, really. And you can tell that people have been bullish. We're back, and therefore they've been opening these longs. And it's only really starting to pivot now. So in the last 24 hours, people have gone, oh, we pumped, but we've stopped pumping, so therefore it must be bad. And the shorts have started to open up again. And if we look at the 30-day, it's kind of what we don't want to see. The 30-day is pretty even, and that is kind of why on the high time frame we're just here. And could we go up and grab the 151? Absolutely, and we really should. Could we go and hit 157? Absolutely, we really should. There's a bit of a gap there, between 151 and 157, so it wouldn't necessarily just be a straight pump straight to that number, because it would be inefficient to buy the price up through that area. Could we go up to the 160s? Absolutely. Now to the downside, could we go to 120? Definitely. Could we dip a bit below 120? Definitely. And what I've sort of been looking at today, we'll just drag this across here. So I've been looking at all the high time frame structural moves, and the ones I've highlighted in here, there's 3 that are active. So these are targets that will get hit one day, and so that's 111, 120, 108. But if you want to just go and get those when you've got things like this 9-week structure here, which is deciding that once the price travels above 161, then it's going to at some point come down to 106. You've got 65-day structure, which is saying that when the price goes above 162, at some point it's going to roll over and it's going to come back to 108. So you start to see numbers like 108 and 108, or 106, 108, these sort of numbers that are all quite close together, 117, 120, 111. Everything that I've highlighted in here is something that's kind of around the 121 or lower as a target, but it's also something that fits within the relative upside range of some of the high time frame trend bounces and things that are going on at the moment. Now, it may be a case that we go down first. It is possible. We could tag all this stuff, and then we have long structure already in play to bring us up to these higher numbers. And then when we hit these higher numbers, we may go down for a double bottom, or we may go down for a lower low. So that's also possible. We could go down and take out, say, everything to 108, pump up, hit something like the 160s, and then head to a lower low at 106. Right. So that's also a possible scenario. The most efficient thing to do, though, so let's just say you're sitting there right now and your belief is that we're going to have continued market, bull market, and there's a lot of influences online now, going on about how the 4-year cycle was fake and blah blah blah. So if that's going to happen, the most efficient thing that price action would do is it would go and tag those upper targets first. And the reason it would tag the upper targets first is to engage the shorts, to then go take the low, and then if it bounces quickly from that point, those people are correct, and we're moving, we're moving on. We're going to go higher. If it doesn't bounce quickly from that point, those people are wrong, and then it's going to hang around. It's going to create new structure. That'll be some kind of structure that means that it'll only go back to, say, 130, and then at 130 it might dump to 80 or something like that. So, the structure is in place to effectively create this big move that goes to the upside, goes to the downside. But I don't think anyone really can tell you, is it then going, like, what's going to happen then? Because that structure just simply hasn't been created yet. What we do know factually is that if we look in here, we have short structure for January, February, and if we take that out, we also have short structure from the 7th of December onwards. Okay, so all of these moves can be created if price is at a particular point at a particular closing time. And some of those closing times are not that far away. So if we look at, say, December, this block here, and if we're not out of this 140s area up into the 150s by these sort of dates in December, we got one there in the 130s. You don't want to be in the 130s on the 8th of December. But if we're really not out of this area, then you can see how then structure generates and validates at that point to then bring 80, 77, 73, maybe even 58, in as targets. So the liquidity at the moment on the high time frame is even, and it doesn't really give us a huge amount of confidence to say which way first. The structure is telling us that it would be more efficient to go up and tag the shorts and then come back. However, it's also telling us we really do not want to be down in these lows for any more than the next few days. We need, and in a way, it's a sign of bullish intention if they choose to not create the structure. And even this, just to put it in perspective, you've really got to, like, unless you want to visit double digit on Sol needs to get back up and over the 156 area. And when you then compare that to the longs, which I'll just find. Okay, so with the longs, there's really not a lot left, as you can see. But the one that really could actually bring the price up and stop all of that structure from getting created is this one here, right? It's an 86-day time frame. It's been running for a really long time. So if this, well, sorry, I should say it's existed for a really long time. It was validated back in September. It got entered in November. And if this long was to move up to its target, it basically clears all of those double-digit shorts from getting created. But as you can tell, there's not a lot left. Most of the longs that have existed, I'll just flip that around. Most of the longs that have existed throughout, the 2025 have all been completed. So, and what we also know is because if we spend too much time at these lows, there's just no more. There's nothing that will get created in December unless the price goes up. There's nothing, for 2026 unless the price goes up. So, my sort of view is that December really is it. You've got to get the price up in December. We've got to get up over those 150s. You've got to get up over that sort of 160 area as well, preferably. And from that point onwards, if it can hold it, there will be more long support generated. And the shorts that are going to come in to take it down to even lower levels, they won't get created. And maybe then the people talking about bull markets are right. But looking at the data, there's a lot of resistance above, and there's not a lot of support. There was a 1-day support that was generated just recently, but it's like a high risk support because it hasn't really had a continuation or another range built above it yet. It's too early days to sort of tell if it's a reversal, and that's some of what we were talking about just in the last couple of videos about the size of that candle that could create a range, but just hasn't done it yet. So, right, that's about liquidity and structure. Let's have a look at these charts and see what they're up to. Okay, so starting with Sol BTC strength on the daily here, we created this candle, which we were hoping we would get continuation over the pivot here, the 2.618. We were in a position to break a trend, but as you can see, the price is pulling back down. So we got 3 hours and 23 minutes. The New York algos will go to sleep, like the main New York algos will go to sleep in about 30 minutes. And, when that happens, maybe this candle reverses and starts going up. The whales will sort of, they'll jump in and they'll decide pretty much where they want the structure to be. And it's always like that. You tend to find that the New York market does what it does, and then when it closes, the books thin out, and it's a more efficient time to push price around and do what you want to do. So you tend to get the whales coming in. So if this closes below 15189 and under the trend, it's pretty likely that it will, give continuation to the downside. It hasn't technically lost the base of the range yet, though. So this 1.618 here, or 15076, could provide support and push it back up. So you might get one of those sort of periods like what you saw over here, where the candle goes up and then down and then up and then down and then up and then down and then makes a decision, as to what it does. So we could get the same thing through here. And that's actually relatively organic behavior when you're dealing with trend breaks. The trend at some point probably was, over here, just based on how far out that actually is from those candles. And that's probably what it was doing here. It was probably trying to get through the trend. So you can sort of see the same thing could play out here. Now, if it closes back up over the 15189, it doesn't create a hold level. Now, if it doesn't create a hold level, that's kind of them whispering that their intention is to have this little pullback, induce some more short liquidity, but they probably want to break the trend. And the one way to break the trend is to have plenty of liquidity on, in this case, it would be on Sol, so that Sol could then push up through the trend at a faster rate than BTC to then actually bring the chart, the Sol BTC chart back up. So that's what that's telling us. Ideally, we don't want to make that hold level. And if we do, then we really want to see this 15076 support. And then maybe tomorrow we break the trend. If all that support is lost, then it's going to come back down into those 145 sort of areas. This hold level that is down here at 14771, that may bounce, but it's a high risk, just because it's normally what you'd want is you'd want a range, another range, and then that becomes a super low risk, because at that point it is definitely on the backside of the ranging, whereas at the moment it technically isn't really on the backside yet. So Although it would be on a lower time frame, so there could be lower time frame moves in amongst all that. Okay, let's have a look at the safety assets. I really need one of those gifts that said we knew this was coming. You know what I mean. So looking at the safety assets, we said yesterday that we were down under the resistance, and that was good, and then we're going to push down. But we could hit the trend, and if we hit the trend, we're probably going to bounce. Enough said. So that's basically where we're at. If we close below the 67.91%, then we're still within the base of the range. We are closing under the origin resistance level from back here in 9th of November, but we are closing in a pretty solid place to actually be over top of one of the interior trends, and then it could try and have another push up again. Because yesterday's close never revisited 68.24%, that has become a stronger level of resistance than what it was prior, because there was failed accumulation back to the level. So all signs are kind of pointing to resistances developing above for safety assets, which therefore means there could be a bit more upside to alts based on that. However, it may not be tomorrow, just looking at this, because if this closes badly, e.g. up over any of these levels, then it would be a pump, and therefore you'd expect risk assets to be taking the dive. Okay, so that's what we're seeing there. Let's have a look at the totals. Well, that was a bit of a tricky close. So yesterday's close, you can see they just pulled it just back underneath that 2.86 level, but they did close it over the 2.85 level. So there was two break levels in there, and neither one of them is an origin level because the price has touched it both times. No failed accumulation back to the level. Now, with the next candle, if we close at this point, will be over top of the trends. It could therefore break trend tomorrow if it ends up closing yellow or up. But what has affected, like the overarching picture here, is that it hit the 2.89, which was the range base, and it failed to actually get over top of it. So it's tried to create a range. It hasn't got back in. It hasn't created a range base. The most likely thing is that it comes back from here. But as it does come back, like I say, it could easily find support either on the reverse side of the trend, which is typically what bullish, how bullish behavior is when they break trends. They sort of go up above, close over top, tap the trend, and bounce off it. Like the reverse side of a trend shouldn't be support until it's hard close. So if it ever bounces the price, you know that they're being bullish because it shouldn't bounce the price until it has a hard close. So yeah, they could use the reverse side of the trend to break through these horizontal levels. And if they do, then any kind of close up over, so preferably a hard close, but any kind of close up over 2.89 is bullish for this to continue to create a range to the upside. The next break level is up here at 2.97, so you would expect to see something around that kind of level cause some kind of pullback. And overall, if someone just put this chart in front of me and put a gun to my head and said, is the price going to go up or down? I'd say the price is going to go up. Right? And the reason for that is actually more so this range trend over here. So we've broken that range trend here on the 26th of November. We've retested here on the 1st of December. And the top of the range is 2.97T. That's the break level. So if you've broken the range trend, you should break the range. Unless there's something else to stop it, and the thing is there isn't a hold level to stop it. So if there isn't a hold level to stop it, the price should go up, but it doesn't mean it goes up in a straight line, which is what catches traders out. You got to remember it moves to liquidity, and if everyone gets too bullish, then you have a pullback, and then eventually it goes to your target, and you go, hey, look, you were right, it went and it hit 2.97. I think I might have just said 2.79, but and you go, hey, look, I was right, but it didn't matter because you got stopped out. in the meantime or whatever. So, but if I just had to say one thing, it does look bullish. Like it looks like it's capable of getting continuation. Right, let's have a look at the alts just to see if they're treating those any differently. So nope, the alts are basically the same, except they are under trend. So you might, so you might see a little bit of weakness come into alts overall compared to BTC. So that's interesting. Looking at that now, it's kind of, because it was the other day, this was more bullish, but I think at the same time it was more bullish. It broke a trend and it moved a trend. So now it is back under the trend that it moved. So it's you might start to see there's a little bit less structural support in there without BTC. But hey, if BTC pumps, everything goes anyway, as long as it has a pairing. All right, let's have a look at Sol. Okay, so Sol on the 1 day, we want to see it close over 140.260. Because there's a prior broken trend in there that appears to be offering support. If we can close up over the range level, we should then be able to kick off a move up to the 150 sort of area. The backside of the broken range that's up here at 154 has kind of already been retested, and then it's really just that hold level that's up there at about the 160s. So you can kind of see how if you go back and look to the rant at the beginning of this about liquidity and structure and moves and how we had that 86-day move, you can sort of see how the 86-day move could play out up into this hold level up here. And it really is kind of the first resistance on the backside of the range that could create, therefore, a continued downwards ladder. So that is a very high probability place that the price is going to go. Looking at this view of liquidity, you can see that the pullback that they've created has got a whole bunch of people chasing, which now makes it easy to push that price back up. Not so much on BTC, because they haven't bridged this gap so much here on BTC. And then if we look over here at the high time frame liquidity, the positions that have been open for quite a while, you notice that the top of that is 164 before you get into this big gap that would be very hard to push through. So if we then take that back to the structure that we see on the chart, everything up until that is pretty easy to push through. But once you hit that, you hit a pretty solid hold level. It's a high probability hold level. It created a range. That range was probably broken even. I'll just have a look at this. Yep, we went all the way down. We crashed under the range. We were stuck under that range for quite a while. And it's pretty likely, you may even find you get a bit of resistance around the range base here at that sort of 158 area, but it's pretty likely that is going to be a tough spot to crack. Even though we do have some targets up into the 170s, I'd be very careful of this thing. So as far as bearish case, we got 3 hours to go. So with 3 hours to go, if they push the price back down under these trends, under the prior broken trend and under the downtrend here, then that's definitely bearish. We have a hold level, but again, it's a high risk hold level. This is the kind of level you can take a scalp trade on with a lot of certainty in the future, assuming we get another couple yellow candles after this blue one. So blue, yellow, yellow, up to our target. This becomes a high probability scalp that you can take on decent leverage. You can refine it down. You can get a really good entry, and you can make good pocket money on that. But for now, really, we just want to see this thing close 140.260 or higher based on the daily. Higher the better, realistically. But we're not creating any kind of origin levels that didn't already exist. There is a interior trend array that'll happen today, which is that. so of course the higher the better. If we were to close at say 143, then you'd also be able to bounce off this new trend support, and that would just give it more reason to actually push up. You do sort of want a trend if you want to try and break a horizontal level as well. So, if this candle doesn't break these origin levels at the top here, or can't close over the top of them, then maybe you need another downwards day, which might create some kind of trend like this. And then that trend becomes the staircase that allows people to walk up to the next level of the building. There's a good analogy for you. All right, let's have a look. What else we got? We've got 2 days. So for 2 day to create a range base, it needs to be up over 144.427. It doesn't have to do it with this candle as long as this candle stays blue. You can kind of see the fight at the moment is basically the range trend. So you got this 2 day range trend trying to pull the price back down. You've got 2 break levels up here that have rejected the price. Now that was, where were we? 144. Both in the 144, so 144 and 1.1 and 144.7. Now, if we can close over that 140s area, preferably like what the 1 day needs, then you will be up over top of the range trend. Doesn't mean it's hard closed. It can still go down below it, and that's what happens in bearish times. But in bullish times, it could just take off from this 140.145 level, or it could bounce off the top of the range trend. It could bounce off the prior broken trend, which is getting recaptured today. So all of these levels, sort of like down to 137, and it hasn't actually touched that hold level either. They're at 137.323. So if this is indeed going to keep ranging to the upside, it could also just use, that as a hold level to push it back up again. Slightly different fib, so it basically goes from 137 to 139, and then if it gets continuation, it goes through the next, the next few levels. Okay. 13 day. And this is the one that I'd really like to see us close over. So 140.713. That is the origin. So this is a in range, what we call an in range origin. So the beginning of the accumulation is always this first accumulation candle. Now this one did work through the first accumulation candle, which later became the break level. So there is origin levels in here, and if you went down to a lower time frame, you will find them. But we call this an in-range origin. Now, if we were to close back up over the top of that, that could be all we need to just kick off a move. And the first hard closed untested resistance is right here, 173. There is a range base at 168, and that's obviously something that created this big dump. So to the bearish side, if the trend hadn't have caught this and sent the price back up, this candle would have made it down here to the 117.771, and it still wants to. Like, it still wants to come and test the pivot for the range that's been created. But if the trend can get it back up into this range, and then this level will come up to either the 168 or the 173. So you're starting to see, there is a really good chance of a decent recovery if it can get back up into these levels. So that's what we are seeing there. Okay. What else we got? 26 day. And the 26 day has a range trend at about, I actually think this is meant to be there. Where was that? 177. It's hard to say. I'm just going to pause this for a second, just bring up a different chart. Okay, so if we go by the Binance chart, because of that October 10 wick, it's a funny wick, that one. And on a lot of the different exchanges, it goes to different places. And so it makes it a little bit hard to figure out where the trends actually are. But if we go by the Binance chart, I'd probably say that the trend should either be about here or it's going to be here. Now, that would mean that the 26-day close today is a loss of the range trend. And if it was to get a retest, it could be, say, if we go off that one, it could be about 178, 179. And if we go off that one, it could be about 185. Okay, so we don't quite know exactly where that trend is meant to be because, like I say, it's different across all the different exchanges. But what we do know, and this is the Hopium this is the Hopium chart that I've pasted every now and then, just because people always like a bit of Hopium. What we do know is this. That is our 6-month range. And if we view this on a daily level, because the problem with candles is their width doesn't really change. All right. Now, if you were to actually look inside the 6-month candle and look at where that trend is, because the price of the trend is different over time, but fractally you sometimes just can't see that it has hit the trend. So if you look inside there, what you can see is we have bounced off that 6-month trend. And if you just looked at that one chart and those two lines, you'd go, well, that's our first 6-month resistance, 179. This is bouncing off a 6-month trend. This has created a daily origin level. Is it hard to believe, based on that we're not going to go hit that? I don't, like, personally, I don't find that hard to believe. So will this be resistance at 164? Probably. Could we do that? Yep. Could we sweep the trend and do that? Yeah, definitely. Could happen. It's a 6-month trend, right? So it can get funky. It can go below it for a long time and then go back up, etc. But overall, I think that's the biggest structure that Sol basically has in play at the moment. All right. Which means we don't really care about our. Let's have a look. Our 169. No, our 169 day close. I don't think we. Just see. Did we hit the trend on our 169? Yeah, we did. So we've also been bouncing off the trend there on the 169. And that could take us back to 204. So we'll see how that goes. It would be nice to go back to 204 because that's kind of that was that level that just really hammered us. It'd be good to go retest it from the other side. But we did kind of already do that based on this time frame. Okay, let's have a look at BTC. Okay, so looking at BTC on the daily, we've got an origin level here, and that is 92959. So if we can get an accumulation close over that today in the next 3 hours, and this is the kind of thing that whales might do, as soon as these algos, which are sort of off now, if they push the price up into accumulation and close that today, then that's a hard close of a daily origin level, and the price, I would expect at that point, would pop. Now, it may bust through the trends. It would almost certainly hit the next break level. It may hit the level and even close the level to create a range base, in which case, yeah, okay, we're back. Like, that's the kind of move where we're back. Now, until we close over 98.336, we're not back. Because, in fact, actually, even going to 107, we're not back. because if you're going to do a retrace inside of a downwards range, that's the pivot level. Right, so it sounds like you're back if you're going all the way from 80s to 107. But if you've looked at any of the lower time frame stuff and really analyzed this, it's not uncommon. It's bearish, and you don't even create the range if you don't close over 98. But the first pivot for the range to say that you are actually going to continue up is actually the 2. So it's way too early to say we're back. But if we do break this origin level, then it's starting to look pretty good, and we should at least get up to there. And there's a lot of confluence with these levels, because this level, this 2, equals this break level. So it's all the same. This 107.334. So that's what we're seeing there. Now, if we want to throw a bearish scenario out there, and it's going to require a few more days, I should say, to make this bearish. But the bearish scenario would be we close below the origin level, pretty simple, and then we get another downwards close. And of course, this 90.394, 90.327, this particular whole candle that's creating this whole range, or trying to create this whole range, that would have to fail. Okay, and actually, have I got that? No, I've got that fib wrong. Do I? Sorry, folks. Why do I have that there? That should be there. Ooh, now I'm confused. No, okay. Right, rewind. We're actually only looking for a close over 94.483 to create that range. The pivot point is 101. Yeah, that makes more sense anyway, because you can see how that 101 was the support for all 4 of those candles. It couldn't close below it. And then the level 3. So, okay, sorry everyone. Rewind that. I had that line in the wrong place. Maybe there is a higher time frame somewhere. So if we get the close over the origin, which is still the same level, that's 92,959, we then need the close only over 94,483.7. If we can then get into that part of the range, we should go test the 101. That makes way more sense, because 101 is actually the level we were talking about yesterday. And that's the level where a lot of the shorts start to kick in. When you look at BTC, where are we? Yeah, I'll just bring up this chart. I should really pause this. Be quick. No, okay, I'll pause it. All right, okay. So in my defense, I've only had half my coffee, which means you're only getting half my quality today. Anyway, Merry Christmas. So that 101 level is this. So these are, like what I showed you for Sol, these are the structural shorts waiting to be triggered for BTC. And as long as we can get the price, because there's so many of these shorts that kick in if we do not get back over 94, 95 in the coming days. But if we do get back over and those don't get created, then all we've got is this one of these to basically 74,967, and we've got this one here to 78,820. Now these could get left behind, and we could go up and we could spend time higher up. Everyone, I call these kind of like the FU surprise shorts. Before you actually go and range to a higher level, quite often there is a target created and left behind, and that happened, when BTC went from, I think it was like 80s. It went from the 80s the first time up above the hundreds, and then they'd left behind this daily target, at 80. And then of course we ranged up there for weeks, and then all of a sudden there was some big dump. I can't even remember whatever people thought it was or why people thought it happened, I don't know. But it went down and it just boom tagged the level and off we went. So I call them the surprise ones. They're always the ones that are just left there so that later, something can happen. So we created that 112 a couple days ago, which we spoke about in one of the videos. Now, all of these others that already exist, so these are validated, they're there, they're ready to have the price move up into them and then at some point roll back over. They started about the 101 300s, 101 424, that sort of level. So if we then go and have a look at this range, the midpoint of that range is 101 100. So if we were to try and push back up through this, so let's say we do start to create this range and we get above the 94 483, it is good to be above that 94 95 area, because then there's a whole bunch of new structural shorts that will not get validated on their appropriate dates, and therefore there won't be the more downside targets coming in, but it doesn't mean we get past the mid-range. We might just hit that pivot, reject, and go down. And it is literally this origin level from here to the cent, so or nearly to the cent, within 60 bucks. So yeah, I would expect resistance there. There is a 7-day and a 5-day short around that area that kick in, and there's also, it is an origin level that has been hard closed and broken, and it's very likely to reject, and it's a pivot point for a range that it's trying to create, so it's very likely to reject. And it's even just a number. Like, if just consider psychology for a moment, how many people are like, I missed the top, I'll sell if we get to 100k. You know what I mean? Like, it's just a mental thing. So just watch that level is the short version of that whole big spiel. Okay, let's look at the 2-day. Yep, so 2-day, what's this over here? So 2-day is above its range base. It's actually got like a range inside of a range that it's creating today, which is a real weirdity. So you've got this candle from the 21st of November, which was able to create a range based on the historic break level, which became an origin. Then it's actually doing it again. It's gone and hit this break level, which is part of the range that it started to create, and it's creating this tiny little range off this candle here. So as long as it closes over, if it closes over 93,028, then it will be creating this range within the range. And the top of that range roughly lines up with that 98 area and all the trend resistance and everything. So it looks like it is trying to develop something to continue up. And this range may complete in entirety, but still reject off the midway point of the bigger overall range. So that's also possible. I mean, if it doesn't, then you'll see 105. There is a lot of confluence with 105 as well. It's one of the primary long targets that exists across most time frames. Where is it? Here we go. So this is a huge cluster, of time frames, all pointing to 105,377. So that's like what Sol was, all pointing. There was a huge cluster like that on Sol pointing to 123, so it was kind of like a matter of time. So that would mean that you get up to maybe the level 3 on the 2-day range, on the bigger 2-day range. Okay. What else we got going on? All right. So this is the 13-day, and this is one that I pasted in the group this morning. You really want this to be closing over 97.45 today, and right at the end of the New York market, they just started to sell that price down. And then, of course, now that NY's finished and the algos are kind of gone to sleep and the whales are more in control, it looks like they're trying to keep the price up. There is a trend actually coming through here as well, which is that one. So it's a prior broken trend. And if they push this up to maybe 93,835, somewhere around there for the close, then they would definitely be opening on the top side of the prior broken trend. They would be back inside. So now think what we've just spoken about when it comes to the pivot point of ranges. And now, so this is a distribution range pointing down, and it hasn't hit the 3 yet, which is 77.836, but we know we have targets at 78, so we know that that's still kind of somewhere it wants to go. But if it gets back inside this 9745 area, it could push up and then try to actually go and break the distribution cycle. And that would mean, hitting numbers like, I bet you this is 101. Let's have a look. Hey, look, 101, 041, surprise. That would mean hitting numbers like those 101s would have quite a high probability. And of course, if we hit that, we could then reject off that and come back down here anyway, to actually test that 3. Because nothing's actually hard closed either side of that pivot line. We've come from the top and we haven't really hard closed it with a blue candle. We're coming from the underside. We haven't hard closed back up between 90 and 103 with a yellow candle. So, and it's a 13-day time frame, so it takes a really long time for us to know what that next candle or how that next candle is going to close. But you can sort of see the confluence of it seemingly trying to work its way back up into that 100K area. Okay. Oh, by the way, a bearish close, if we've got 2 hours and 44 minutes, if they push it back down under that level, under that 90.745 level, then, hold your hats, it's probably going to dump. But the levels down here are all very, very confluent with completing the last 2 structural shorts. So we've got this untested range trend, funnily enough, sitting down there in the 74 area, and it has been broken and never retested, so it is due to be retested at some point. And we have the range level at 77, so close enough to 78, right? So that's basically, and then we have another range trend, I think, that's actually, what's that, 79? Yeah, I mean, there's so much stuff in there. Another one at, in fact, this one's never been retested either for first touch, which is, around that 77 area. So everything is in there to be retested. Yep. Okay. What do we got? 26 day. Now, I don't think, have we been to 94? Have we been to 94,420? I don't know if we have. We've been to, what's the highest we've been? No, we've been to 94,147. So this is actually still just trying to play out its obligation to bounce off that backside whole candle there. And you want to really see it up over 94,420.7 before close. So that's in the next 2 hours and 42 minutes. If it does that, it's definitely showing intention that they want more upside now. If it doesn't do that, then it's opening under a trend, under a prior broken trend, under a minimum obligation level, and there's a pretty good chance of it pushing up. And I guess the real question is how high. That's what everyone's going to want to know. It's a 26-day time frame, so it could push up and push up and push up. Nothing is hard closed until this level, which is 106,421 would be the first hard closed level. Really, arguably that range trend too, just because it's no, yeah, it could be around here. Actually, September that opened on October the 14th. That has got the October 10 wick in it. It may be the range trend. I'm just going to pause this for a sec. Hey, the magic of video recording. And I'm back. Yeah, that will be the range trend. So 94,470 will be the minimum obligation level, but it will be hard closing the range trend. And that's about 103, roughly 103, 102. Quite interesting structure this actually, because this is going to create a range trend as well. So you might find that this becomes a bit of a trading channel between these two levels. So if we do get a dump and a sweep of the bottom range trend down to achieve those shorts, then what you would do is you'd be able to long it once it recovers the trend and then take it back up to that top side. So that's if it goes down first. If it goes up first, it's actually kind of bearish because it's probably going to reject and then go down. But anyway, let's have, what else was there closing today? 26 and 169. Yeah. So simply put, we need these candles to start closing over 93,570. If they don't close over 93,570, what you're probably going to find is that we just keep creating hold levels. Now, they're not hold levels capable of creating ranges because they're not engulfing the works. They are a lower probability of meeting their targets because there are trends that are effectively going to get in the way of them actually getting to their targets. So there's two like this in play at the moment, which have targets of 82, but they all have these trends, which are sort of designed to try and stop them getting to the 82. And if we close under 93,570 today, we're creating another one. If we create enough of these, and this is like the 123 target on Sol. It just took a really long time to play out because it had to break the trend, and it didn't break the trend until we were up, in the 200s or something. And then when it broke the trend, it's down. It goes and finds its target. So, yeah, we're either going to head down low soon, or we're going to go up. And over time, we will break the trend. And when we do break the trend, you know where we're going to go, which is going to be these lower left behind to surprise you targets. So that's us for BTC. Let's have a quick look at Tesla. I think it's making everybody proud. Yeah, yeah. This is on a that's on a rampage. So it broke the hold level, it hit the break level, it created an upwards facing range trend. It's got a downwards facing trend that moved from back here on that 28th of November candle. It's shifted to the top of this one on the 3rd of December. It's currently bouncing off the top of the range trend. It's bouncing off the top of the shifted trend. And it's post now, so it should close the day like this. So it's closing the day up inside a hold level. The next break level for this is 467.45. There will be a range trend created across the top side of this closed candle. Now, because there's no wick on the top side of that candle, by default, it's most likely going to open on the top side of the trend again. So it's very similar to this, what happened down here. Also, this trend is going to shift as well. So basically, there'll be a range trend and a normal trend that are both exactly the same line. and if it opens on top of them, it can bounce. So it looks like it's going to try and target the upper levels. Now we then run into the exterior trends, which are bigger, stronger trends, which stem back to December 24 all-time high. And if it breaks that, cool. It's going to go sweep the tops. The only thing I'd just say to be really careful of with Tesla is, like I've mentioned in videos before, there are this is the top side of the range, the overall bigger range. It hasn't, like, it's hit the top side, it's retraced to the middle, it's bouncing back up again. But what it didn't do last time was it didn't sweep the top side, it just kind of tapped it and then went down. And so they might sweep it and then go for a deeper move to the lower part of the range. So yeah, I'm a relatively conservative profit taker. I tend to look at things and go, well, what's the worst that could happen, and then take profits based on worst, and that way you don't really lose. But you don't win as much as you could sometimes. But I tend to find conserving money works out a lot better than going for moonshots. So if you were to get a sweep of the upper parts of this range, which could push it up to, say, the 490s, be real careful of 500. It is such a psychological number. Like there'll be, like we mentioned before, there'll be a lot of people going, if it gets to 500, I'll sell, because they bought cheap. So yeah, watch that space. But it looks like it's in a good spot for a daily open. And this is the weekly. So 3 days to go on the weekly, but not really, because obviously stocks aren't going to operate over the weekend. So what do we got? Thursday, Friday. I got one more day. So if it can close over 456, then you might be seeing the creation of a weekly range. Now the pivot point for that weekly range would be 501, and that's kind of what I'm getting at, as far as just be careful, because if it hits 501, which would be a psychological number, it would be going through this up-facing trend, which is actually meant to be there. It'll be going through that. Actually, no. Sorry, guys. It'll be there. Or wherever this candle closes. Yeah. Yeah, the other day when I was looking at this, I was sort of just predicting, based on this kind of almost seemingly random rejection, that the trend will be there. So, which is just prediction. It may not be there, it may be there, it may be higher, who knows. But what it will be is it'll move to the top of this candle if this candle closes yellow. So it's nearly impossible for that to be sustainable, just because it's up facing. And even if there is zero wick on the top, so just pretend that wick wasn't there, even if there's zero wick on the top of that candle, it's still going to open under the trend, because it's up facing. That's why up facing trends create rejections a lot of the time, because you can't open over the top of them with the next candle. So it takes quite a bit of bullish price action for it to then just open underneath and then break. And the thing is, it actually can't break, which is why they often get swept. And it's why up facing trends are pretty much the tops of all cycles, because, like, if you take this as an example, you can't, if that was a trend, which it kind of was, because you had that, there's your sweep, under, down, comes back up. You can't flat body a candle in any way. You really have to push up through it, and that requires quite a bit of strength. So yeah, wherever that closes, I think what we said yesterday was just keep an eye around this topside area, because there is a prior broken trend to be retested. But if it does close over the 456, then maybe think more along the lines of something like that, which would be very parallel in nature to this. So yeah, and there'll be a range trend like that. So it could, as long as it doesn't go up too much, you don't want that range trend to reverse and become up facing, but as long as it can break the range trend, it might be able to use the range trend to give you that push. So I think overall, I think Tesla's probably going to at least try to go up. I just think you need to be a little bit wary about whether it's doing this as a sweep of the overall range to then pull back down, or whether it genuinely is going to give continuation from here. If it does give continuation, then there are your levels: 501, 546, 590. Just keep an eye on those. Okay, what's MicroStrategy up to? 186. That's not bad. It's doing better than it was. Let's see. So we had a 1-day range on MicroStrategy attempting to form. And let's see if we are. Nope. Unfortunately not. Okay. Well, if we can get a close, where are we going to be? A close over 187, it's too late. It's already closed. Okay. So we did break the trend. Trend is going to shift to the top side. I was just looking at that going, why did that trend not move? And I've just realized I did this chart manually. Didn't use my cool little tricks. Okay, so there we go. So trend moved, opened under trend, rejected. Yeah. So it hasn't been able to create the range. It is really struggling. Even like when you compare the price action to BTC, it is really struggling. The next candle can open on the top side of the trend. So you really need to see a bullish candle on that over top of this trend to try and keep that thing moving up. But it's got this hold level over here as well at 196. So yeah, 203 is still the daily break. Most of this is just consolidation because it's just one candle, one candle, one candle, one candle. That's your first range. So if you were to put a top and a bottom on all this, just purely based on daily structure and forgetting all the bigger stuff, it's here and here. So 203 at the top, 155.61 at the bottom. One of those really needs to convert to an origin and then be broken, and that would, and your hold levels are 182.99, which is kind of what's trying to support it here now, and 196.36, which is, or if it gets really bearish, just 196 flat, which would be the wick, which is going to be the thing that's going to try to reject it. So that's the box you're playing in. It's got to break the top or the bottom, and if it breaks the bottom, it's going to go donkey deep, and if it breaks the top, then it's on its way to recovery. But yeah, there's no technical daily trend reversal in there yet. All right, that's us. Like, subscribe, and sorry this one was a bit more rambly and a little bit half coffee, but yeah, try to get better next time. Leave some comments and all that kind of stuff, and if there's anything else you'd like to see, do that as well. One thing I would be interested in some feedback on is if I was to do a few structured sessions per week, what time frames or time slots would you want those in? Because I get it, I'm in a really weird country where we live in the future, and our time zone is probably not quite the same as everyone else's time zone. But yeah, it'd be good to get some feedback about what time suits you guys, and then maybe it's worth me staying up late a couple nights a week and doing some live stuff or something in those slots. We'll see. So yeah, flicker back and we'll catch you again. Bye.